Right, we are live. Shmulik, you're on Manhattan Island, right?
I'm on Manhattan Island.
Okay, all right. That make you a Knicks fan, or are you just there for business guy?
Gosh, and it seems like we might win this series. I don't know. Last night was a little tough on us, though.
Yeah. Me and Rob's teams both got kicked to the curb, Cavs and the Warriors. I thought that could be the final, Rob, but 'twas not
What
to be.
what is a cavalier anyway?
It's like like one of those guys with like a big like jousting sword.
Lance?
Yeah, something like that. Yeah. So
All
it's
right. It's always good to know what the mascot is and does.
Yeah. It's yeah. It used to
I
be the
like that question.
mascot used to be, like a guy with like a helmet and a sword. Now it's some dog called Moondog. So I don't understand that one, but sure.
Yeah, what happened to the mighty Cavs? I mean, they had the second best record in the NBA and just
Really disappointing. I think Indiana was a horrible matchup for them. And I'm not making excuses. We were banged up. Garland's toe, they said it would have been a 6-week injury in the regular season. Mitchell wasn't 100%. We didn't have Hunter, for a game. It seemed like more. So, I just think that, it was bad matchup, probably a little banged up. And yeah, I think Indiana just wanted it more. This Cavs team is incredibly talented, but they do lack toughness and killer instinct, two requisite traits for the NBA playoffs. So, Golden State was much easier. I mean, they might not beat Minnesota with Steph Curry, but they probably do. And, I was just untimely.
yeah, the games even without Stephen Curry were somewhat close. I think with him, but I mean that's part of sports, right? Injuries, but that must have been very, very frustrating for Mr. Curry to sit there on the sidelines and watch, those games happen, and
Mhm.
there's nothing he can do about it.
Yep. Yeah, no question. But yeah,
Kind of like us and Fannie Mae and Freddie Mac. We're sitting here. What are we going to do about Fannie Mae and Freddie Mac?
yeah,
And
yeah. Well, and we'll get into that in a moment. Let's go ahead and get into it. This is the big picture. I'm Rich Swerbinsky with Onward and Upward Consulting, and our show is presented and sponsored by our great friends at Depth for your public relations, strategic communication, brand management needs. They do a phenomenal job. Carrie, Leslie, Lindsay, and the team at Depth. So if you need your story told in the mortgage industry, I would argue 90 to 95% of the companies in the mortgage industry do a horrible job at branding and telling their story, but not Depth clients. So if you need some help in that arena, depthpr.com or reach out to Rob or I, and we can quickly connect you with the pros at Depth. So
and normally, Rich, you have a little depth insignia in your screen. I think has that been replaced with your the bicep tattoo that you're going to show at the end of today's
no,
podcast?
no tattoos, and yeah, a little technical difficulties on my background. So we'll give Depth even a little bit more love until I can figure out my logo. But yeah, no tattoos, and certainly no showing anything off. So, but and as always, join my esteemed colleague and co-host Rob Chrisman. Rob, good to see you. How's things?
Things are good, except the Warriors lost.
Yeah, it's basketball, sore subject for the co-host of this show this week. So
It's hard to watch. It's hard for me to watch a baseball game, on TV, after having been acclimated to the NBA for the last 4 or 6 months. You know, it's just the pace is so different. But
it's
anyway,
yeah, different pace for sure. And but baseball in person, to me at least, that nothing quite like that. Rob, may disagree. So and this week's special guest, the CEO of Argyle, Shmulik Fishman. Shmulik, thank you for joining us on the show, and great to have you with us this week.
Good to be with you as well. I'm enjoying this conversation already.
All right, it's nowhere to go but down then, I guess. But Shmulik, let
and
me
you're in New York, right?
I sure am. Yes,
Manhattan.
that's right. We had a loss last night as well, to the Celtics.
which was,
Well, you
you know,
should.
Celtics really handled them last night. But I kind of expect, you know, you were going to get the Celtics' best shot last night. The Tatum, you know, anger from the team, you know,
That's what they had.
coming back to the, you going to be at Game 6, Shmulik? What are those tickets going for? About $3 grand for the upper bowl at MSG.
Too rich for my blood, I'll tell you that.
And Shmulik, why don't you, just for the benefit of our audience, give us a little overview of Argyle, what you guys do, and what you bring to the market.
Sure. So Argyle is an income verification platform. So we work with lenders, mortgage processors to get income data, employment data on borrowers and applicants as part of the approval process. Started in 2018. And it's really exciting to sort of see this new wave of consumer permission data being used as part of the mortgage process. I'm excited to get into it with you today.
Love it. Looking forward to it as well. And Rob, yeah,
Yeah.
yeah.
So 2018, you look around the industry, what was lacking then that made you want to start Argyle?
Yeah, so I have an interesting path into this space where of all things back in 2018 I was running a valet parking company. We had expanded to about 8 cities. We were running about 25,000 cars a day. And it was a business that required a lot of labor to get in the car, move it to a parking lot, bring the car back to the owner. And part of that process was hiring drivers. And to hire a driver, much like you hire somebody that stocks shelves at Target or makes coffee at Starbucks, you need to run an employment and background check on them. And that core understanding that so many businesses across so many industries need to run income and employment verifications was sort of the spark. And so what we started at the beginning was building sort of a digital resume for drivers where we plugged into Uber and Lyft and DoorDash so we could pull out star ratings, number of miles driven, how long you've been on the platform. So we could give sort of a verified resume to a dealership that wanted to hire a driver. And then a lender came to us and said, hey, can we use this information to make a loan, a small dollar loan? And I was like, sure, I guess we can do that too. And that really started my journey of sort of uncovering the income verification space. It's one where, for so long, large credit bureaus have sort of gobbled up a ton of data and have been really effective at using that data as part of loans or apartment screens, mortgages. But we've sort of brought a new model to the fold where instead of a credit bureau holding data on individuals, we're allowing consumers to sort of connect to their own payroll accounts and then share their own data digitally with a lender. And so totally an accident, but one of the most amazing accidents I've been a part of.
And I have two questions, two follow-up
Please.
questions. How long have you been working with Depth?
Yeah. It's been several years now, I believe. They're an awesome team. I wish I had a logo at the top right of my screen too.
Well, play your cards right, and you'll.
I can get one myself.
Yeah. The second question is, what you must have a story of from the valet days of Michael Jordan shows up in his gold-plated Bentley, and somebody crashes it or something happens. Any good stories like that?
Oh, from valet parking. Oh gosh, could we could play a drinking game on this one. There's fun stories, like delivering the wrong car to somebody and having to go and pick it up again. There's actually some heart-wrenching stories just to give you a flavor of it. Somebody wanted their car back because their wife was going into labor. And I think we missed getting their car back in time, which is a negative story. That's one of the heartbreaks of running an on-demand valet parking company. All sorts of fun and tricks. There was not a day that went by without a crazy story about something that happened to a vehicle.
Yeah, you kind of wonder, the most folks kind of think of the Ferris Bueller Day Off valet guy who takes the car and
Yeah.
does whatever with it. But and then you also wonder if you're in the middle of a big city like Manhattan or Chicago or where they go off, and you kind of wonder, where does that car go? Obviously there's a parking structure nearby that you have leased or something, have an arrangement with, but you just kind of wonder where are all these cars going? Anyway,
Um, so much we can do there, but we're here to talk about lending, you know? We're not about
I
valet
know, I
parking.
know, I know, I know. Well, Rich is going to plunge into that.
All right, well, let's go ahead and get into it. And Rob, the news cycle continues to be robust in the mortgage lending industry. Just in the last week, another lender acquires another real estate platform. Lower acquires Movoto, not on the scale of Rocket, Redfin, but certainly something to
Same
take.
ilk.
What's that?
It's the same ilk, the
Same
same
ilk, right?
general
Certainly
soup to nuts.
a trend to note. UWM, Ishbia comes out. True to my predictions, after all the Rocket news, he would have all this stuff lined up, and the servicing deal a couple weeks ago with MSP, and now it's the $500 billion volume prediction in 2028, and he wants to increase broker market share, which he claims is 29%. That is absolutely not true. That's double counting loans. A true broker market share, I would argue, is about 20%, but he wants to increase it to, I think it was like 35%. Bill Pulte, Rob, on the interview circuit, not saying a ton, but he's out there talking about all the money they're saving at the GSEs, all the inefficiency, and kind of dodging questions on exit of conservatorship. But if you read between the lines, that's clearly coming just in due time. And then Gavin Newsom in the state of California today, I believe today or last night, yesterday, signed a bill to, eliminate, reduce red tape and regulatory costs for California new construction. So, well, as always, a robust set of topics to choose from, Rob, and we'll see which way you get us started this week.
Well, let's start with uh, the truth and the anti-hyperbole that we're hearing out there. Frankly, Matt Ishby is gonna say what Matt's gonna say. He and I got into it a little bit last week via email on on a topic. Uh, I'm not gonna
I know
bother. I'm not.
when you say anything that isn't, glowing 100% about UW, I mean, he typically takes umbrage with it.
Yeah, I announced their earnings, and he wasn't happy with that.
Because there were none.
Uh,
Yeah.
so it is what it is. In terms of Bill Pulte, I'm not. Uh, he was on. I had his interview in the opening paragraph today. The Bill Pulte, he's going to be at the NBA next week speaking. I I find it tough to be a big Bill Pulte fan. I think that he knows who signs his paycheck, and he's going to say those things and do those things that that promote the current administration. I wouldn't expect anything else, but it'll be interesting to see at the NBA speech on next week, early next week, whether or not he says anything new, frankly. So we're left with Gavin Newsom and the lower acquisition news, pretty straightforward. We've got these companies who apparently feel that the future is, like I said, soup to nuts, capturing a potential borrower up front, way up the funnel, way up the food chain, whatever you want to call that, and then helping them all the way through to funding. And I don't think that they are far from the truth. I think that could very well be a viable business model going forward. And then Gavin Newsom, um, frankly, after the majority of California's population is in the South, where the fires were, the LA fires, and something had to be done. They didn't want a kind of a Lahaina situation where it's just dragging on month after month, year after year, trying to figure out what to do. about rebuilding. Lahaina has a unique situation because there was no zoning as that town was being built. And so the question is now, do you rebuild to current specifications and zoning ordinances, or do you build it the way it was with all the charm and the jumble? So I don't know exactly where that stands, but I know it's not progressing much. So Gavin Newsom, looking at the voter count, looking at the LA situation, and it can be very, very difficult because there's depths, water, big issue. Yeah, absolutely a big issue in Hawaii, believe it or not, parts of Hawaii. I was in Hawaii recently and it just rained every day. So no problem there. But yeah, parts of the islands are definitely dry. Um, yeah, Gavin Newsom has to do something because of the thousands of homes of some very wealthy people that were lost. And you don't want to drag them through some 2 or 3 or 4 year building process. Zoning has changed to some extent, building codes have changed. How do you deal with that? And let's do something to expedite it. So good for Gavin Newsom. The question though is still, if you're looking to get something done, you're still dealing with Edna, in the building inspector's office or the county recorder's office or whatever it might be, and she may not uh, try to expedite anything. So I think that Gavin Newsom and the state can do certain things that has to really trickle down. Um, but I wanted to, we were talking about verifications earlier, and the I want, Small. I wanted to hear how you guys did during the boom years of 2020 and 2021, where companies were raising margins in order to slow volume down. Were you, through automation, able to just wave everything in and move forward?
Yeah, I mean, I think one of the parts of our system is that's been fully automated since the very beginning. And so our price point or our cost to serve a verification is much lower than some of the other players on the market. Um, and so we've always positioned ourselves as a much more cost-effective way to verify. When you're verifying with Argyle, we're connecting you directly to payroll, where we're cutting out many of the steps in between sort of the data itself and the aggregators and the people that are bringing it to you. And so you'll find with Argyle that we can be up to 50 or 60% cheaper than legacy ways to verify because we've cut out a lot of the cost structure that raises the costs of getting the data itself. I think that was helpful 3 years ago, 2 years ago. I think it's going to be helpful in good times and in bad times, having efficiency around verification.
Not a day goes by, and I'm sure Rich, you're in the same boat, where somebody doesn't ask me, where does the name Argyle? How did they get that name? Where did the name come from?
Oh gosh, polka dots just seems like that wouldn't be the right name for the company, huh? Um,
You've used that line one too many times.
Yeah, I think that patterns have a way of resonating with people, and I happen to find that there's a lot of businesses out there that are pattern-based businesses. Stripe does a really good job at payments, and Plaid does a really good job, perhaps at connecting to bank accounts, and Argyle does a really good job at connecting to payroll systems. So I hope there's something interesting in pattern-based names. Um, that's about as deep and philosophical as I can get on the naming of the business for you.
And I
Well, there
noticed
you go.
the pattern-based art in the background as well, Shmulik. I wonder if he may be trying to brainwash us right now, Rob.
I might be. I might be. I don't,
So,
don't think twice about it.
Just take deep breaths
That's
and
right.
stare into the camera.
the verification space, Shmulik, it's interesting what's going on. I'm fascinated by this space right now because you have these big legacy providers, Equifax, Work Number, Experian. You got you guys and a couple other really, viable
Hmm.
disruptors out there, better tech, lower costs, yet, it has been somewhat of a challenge to get lenders off of these legacy issues just because it's what they're used to, right? It's, um,
Yeah.
Explain the fundamental difference between like how you guys verify versus the legacy providers.
Sure. So a normal credit bureau based provider, when you're interacting with them, you're probably very accustomed to typing in a social security number or providing a social security number and birth date to a system, and it returns data, or there's a hit rate um, on that entry. And so what's going on behind the scenes is these credit bureaus have these massive databases of records. And if they have a record on that social, they will return that data set. And it's an addictive experience. I want to say first up that if you're a loan officer, being able to type in a social security number and get data back 30 or 40% of the time, when you get the data back, it's very fast and efficient. Um, the question is that when you've done that, what are the other parts of the process that are still unfolding around it, where you're perhaps still having to ask the applicant for pay stubs or a W-2? You're perhaps still calling up the applicant or the borrower for additional information and additional context. And when you type in the social security number to the database and it doesn't return information, what do you do then? And so I think all of these processes that surround credit bureau based verifications is what leads us to having a new approach, one where we have the borrower or the applicant log into their own payroll account much further earlier on in the application process. And at the start of the application, when the borrower is able to connect to their own payroll account, we're able to download all the pay stubs, the W-2s, all the necessary documents, fill in a bunch of pertinent information about your birth date and your home address, your work address, a lot of information that today is being manually typed in. And we find that when you move to this new experience, it's way better for the borrower and the applicant experience. It makes for a way quicker applicant experience. But more fundamentally, it makes for a more efficient loan officer, where the loan officer is doing less per application. They're collecting less documents per application. They're having to manually fill in less fields per application. But it is full stop a shift in the way that you complete an app. And I think that that is a shift that requires education, time to change. And so we're not here saying that you just flip a switch and all of a sudden, presto, it works this new way. But we do find that moving to this new approach has these massive gains, both for applicants and for loan officers.
And I've heard you say before, Shmulik, that permission data is the future in mortgage lending. What exactly does that mean to the LO or the underwriter in the audience today?
Yeah, perhaps terminology makes something seem newer than it really is. But when you think about um, VOA in verifying assets, this is a process that's been using consumer permissioning for quite some time. When you're using services like Finicity or Plaid, these are services that are using consumer permissioning as well to connect to a bank. And so at its core, it's just that an individual, a consumer, is logging into their own account, whether it's a bank account or a payroll account. And then the consumer themselves is authorizing a lender to access the data inside of that account. Um, and for history buffs out there that really like going back in time, if you go back to the 50s and the 60s, one of the reasons why this wasn't possible is because consumers didn't have digital access to their own accounts. Um, all consumer data was inside of files, like really the file cabinets. And it's really only been over the last 20, 25 years that consumers can go onto the internet, um, go to their bank account digitally, go to their payroll account digitally. And businesses like Argyle are just sort of the layer on top of that digital access, where since they can go into their bank account and their payroll account already, we're just providing an interface for them to share that data that is inside of their account.
And Rob, can you confirm the 50s, 60s? Is that the way it was back then?
That was when I was cutting my teeth in the industry. Yeah, we used to yeah, we'd get Gladys downstairs to call
Yep.
the employer. See if Rich Serbinsky is Rich still employed there? Yes. Okay. How much does he wrote down his income? Is that the income? Yes. Okay. Thank you. Click. That's the way that, that's the way it was done.
By the way, just because it's just a fun conversation. That was considered at the time best in class, the gold standard for verification. And so all we're saying is that there's a new gold standard. That was the gold standard, rewinding the tape 70 years.
Yeah. I mean, foreclosures were low, delinquencies were low, people were making their payments. I mean, what the heck?
And so Shmulik, it sounds like it's getting lenders right to get past that kind of philosophical um, change to how you're kind of collecting data up front to make that shift in their mind because it's better data, it's cheaper, and
Yeah.
and better technology. So it's just getting lenders to kind of overcome that cultural shift.
I think that's right. And I was just talking to somebody about this today, actually about sort of the hidden costs that loan officers, that lenders have in the origination process. This hidden cost of picking up the phone for the fourth time to call an applicant about paperwork that they haven't sent yet, or the sixth email that they're sending to the co-borrower to get the additional pay stubs. These hidden costs, we don't have the exact data around it because it's intentionally not in the LOS. It's intentionally not being documented. It's a phone call on a cell phone. But for loan officers out there that are living this process every day, you know about these hidden costs. And they can drag on your business. And so I think that when you think about how you can reduce the hidden costs, it's about having the consumer do more of the work. And Argyle is the way to get consumers to be more part of the process up front. So they're connecting their accounts, and we're digitally acquiring all of those files, all the data that you need for processing.
A question popped up about how do you handle self-employed borrowers?
Yeah. A few things here. One is, we also connect to QuickBooks. So there's some self-employed systems of record that we also are plugging into. Um, and we also have a legacy. Argyle started, as we were talking about, connecting into non-standard types of income, gig tech platform. So we support that as well. And that's something that we're actually working a lot with the GSEs on how to incorporate more of those types of data into the Argyle data set. But I think there's a lot more work that we can do in that regard, frankly.
You have the classic issue is, of course, the Sierpinski enigma, as it's called in credit circles, and that is, when you have a trading card business where it's a lot of cash, Venmo, checks, winks,
Right.
nods, bartering. How do you monitor that stuff? But anyway, that's a subject for another
It
time.
is. It is.
One of the beauties of that business. Yeah, one of a few. So it's going to be interesting to see how it all plays out. I mean, Equifax, the work number, I would argue, approval ratings, if there were approval ratings of companies in the mortgage industry, they would be not high. My branding tournament I did on LinkedIn, they got demolished in the first round, even though it's a name and it has been around forever. But I remember saying that I would say the exact same thing about Ellie Mae and Compass 5 years ago, and they just continue to dominate the world. So it's going to be interesting to see how that plays out. Any other thoughts on just the competitive landscape and because it is fascinating to me, and I think a lot of other people in the industry. I mean, all my lender clients I work with, they're intrigued by you guys and a couple others in the space. Yet, just strategically, tactically, haven't pulled the trigger yet.
Yeah.
And I'm fascinated to see how this all plays out over the next couple of years.
Mean, there's definitely a lot of players in the space. There's no shortage of outfits that want to assist in the verification process. I'll speak for Argyle. We really want to lead with service and technology. We believe that we have built the best-in-class income verification platform that connects to the broadest array of payroll processors and is plugged in to the most diverse set of POS and LOS systems. All that happens to be true. But I think the place where we're really differentiating is the hands-on approach, where we want to be at your office on a call, working with you live, where this does not feel like a set it and forget it. We're going to hand you a bunch of APIs and documentation and hope that you figure it out yourself. No, we really want to be with you throughout this journey. It is real work to transition to a consumer permission approach, and we want to do that work with you. We know that it can feel daunting sometimes, and having an expert in the room, having a relationship manager, a customer success manager with you, makes a big difference. And so the business has invested heavily in a really robust team that can work with loan officers, work with account managers. So it does not have to feel scary in the way that perhaps some of the stories come out.
This is
So when you're working with a company like Depth, is there, are they targeting, is Depth targeting on your behalf brokers, lenders, investors, the agencies, the entire industry? How do you get the name out there and to whom?
Yeah, I mean, we've been investing for a while in going to conferences. We feel like that is quite an effective way to meet lenders where they are. But we want to make sure that we're talking to everyone, that we're not just trying to pursue one path. But we do find that cold reach out also works, or conversations like we're having right now are also great ways to learn more about Argyle. And Depth is helping us with all of that.
So when you roll out a modification or a new product, do you need quote approvals, or do you run it by the broker, the banker, the investor, the agency, the rating agencies, or MBS investor? How do you
Yeah.
what is there an approval process, or you just say, here it is, new and improved, knock
Yeah.
yourself
So
out?
yeah, there's sort of two categories of changes that happen at Argyle. The first is a set of improvements that are happening all day, every day. Every single time a consumer uses Argyle, the product actually gets a little bit better for everyone. Just to give an example of that, there's 13 million employers that paid somebody last year. It's a huge, diverse number. Um, and so the more consumers that connect through the Argyle platform, the better we get at identifying which employer uses what payroll system. And the more that we understand the taxonomy, the better conversion, the better coverage gets for everybody. So as part of using the Argyle platform, you get to get those improvements that we're giving to everybody every day. So that's a set of things that happen automatically. Then there's a whole host of features that are completely opt-in. And we do a lot of work with each one of our lenders to tell them about new releases that are available. And we want to have them turn the switch with us, where it's not a surprise or there's some email that gets sent out. I know that there's a lot that goes on in this industry where somehow on Saturday at 11 p.m. some change is made, and we don't want it to feel that way at all. Um, you know, we're live now in a real many POS systems, and we've built it in a way where we can tell you what changes are happening, and we can have you pick the date and run the training with you. And so we're trying to run both approaches where we think it's most appropriate.
Interesting.
This is the big
Thank you.
picture, presented and sponsored by our friends at Depth. Check them out at depthpr.com or get hold of Rob or I, and we can connect you with the team at Depth. Shmulik, couple questions for you.
Yeah.
You mentioned building out, working on some projects, integrations with Fannie Freddie. Would be interested to hear how that's going and especially in their kind of current state. And then, on top of that, the regulatory front. Is there any, we're expecting to see, I think the next things coming from housing from the new administration are going to be probably regulatory relief, and some help from the home builders. Any regulatory relief that would really just help the whole income and employment verification process for Americans?
Yeah, I mean, I think that with the GSEs, we're engaged on several fronts. One is making sure that we can keep on increasing validation rates. We believe that we have the highest validation rates for consumer permission, and we've taken an approach with the GSEs where we've really gone payroll processor by payroll processor to make sure they're approving each one of our integrations, and we're now through the bulk of that. And we're also actively engaged with the GSEs around sort of expanding the credit box. How can we get more sort of non-standard income types to be part of the GSE approval process? And then there's been a lot of conversation, I think, over the last few quarters about verification based on docs. So when you can't connect to payroll and somebody has uploaded pay stubs in a W-2, how can we run those pay stubs through a GSE approved process where you can get rep and a warrant relief for doc-based verification as well? A lot earlier days, and we want to make sure that we're doing that in a way that is compliant and has high standards. But I think there's some exciting work going on that front. In terms of regulatory relief, I think that things are really in flux right now. Betting and forecasting on what this administration is going to do next is a game of being wrong. And so I don't want to get too ahead of the administration. I do think that there is broad interest that we hear about getting more people into houses and trying to figure out creative ways to do that. And I think that there's many ideas on the table, but we'd like to see more movement in the housing market. It is still at historically low levels. I think there's a lot of ways to accomplish that, but I think the administration is interested in that as well.
Yeah, housing affordability has been, something they've talked about a lot, especially more recently, seemingly to be setting the table for some probably news and announcements to come in the next
I
week
think
or
so.
two. But yeah, we'll see what happens there. The broader idea, though, Shmulik, of because there's some products, FinLocker and a couple others out there, this general premise of, an American creating their own kind of financial wallet, right?
Yep.
With, where it's automatically updating your income verification and asset verifications, employment, and you can kind of just take this and if it's, car loan or home loan or boat or whatever, I'm assuming you're a believer in that tech and, and just its viability moving forward.
Yeah, I mean, FinLocker has been a great partner with us for many years, and I think that I think this sort of movement around empowering borrowers or empowering consumers to have access to their own data and lenders sort of coming to them. I think that is a really powerful movement and one that I think creates for a better ecosystem, a fairer ecosystem. One of the enablers of that is just having consumer permission access to whatever data set you need, and so we're happy to play a part of that. Obviously, there's other people in the industry that bring other data sets to bear, but we're excited to be part of those sort of lockers or those sort of we have a tool called Argyle Passport that plays a role in that as well. But I think you're right; it's a big piece of it.
And then, we hear a lot about just open finance, open data standards is, just kind of the way the world
Yeah.
is going. How far off are we from like a real open system? And what does that mean to the layperson?
Yeah, what does that exactly mean?
Yes. I've taken the view that the word open is perhaps doing too much work in these sentences. I think what we're really talking about here is about standards, about unifying the standards. And I'll give an example of it that I find helpful here, which is that each state here in the US has their own regulations around what has to be in a pay stub. What are the granularity, the calculations, the formatting of the pay stub? It's state by state.
Hmm.
And so that makes for a lot of complexity around the way pay stubs are presented and what data is presented in them. So before you get to open, you have to get to standards. Then you can have open standards. Um, And I'm not overly bullish that all the states are going to unify their standards around pay stubs. And I think that Argyle isn't waiting for that to take place. What you really get with Argyle is a unified look at somebody's income, where we do all that really hard work for you of figuring out California does it one way, Texas does it another way, New York does it yet a third way. And we've created a normalized data set. So base pay is base pay, and deductions are deductions. 401k contributions are 401k contributions. And we've tried to take the need to have unified standards, or what sometimes people call open standards, um, away from making progress. And so when you use Argyle, I hope that you feel as though you've gotten that level of standard without waiting for the government to do it for you.
Mhm. To that end, Shmulik, does the vaporization of the CFPB and uh, the likelihood, I would say, that the states are going to get more involved on mortgage compliance, is that a bad thing for you guys? Just more things to assess and strategize around, right?
Yeah, I mean, I think that the sword cuts both ways. We need to see what happens with this process. Like vaporization, maybe this happens. Still going through the courts. Um, there's a lot of dynamics inside of 1033 legislation. One of the ones that I know has been quite a bit of angst for the banks has been that they can't charge fees on connecting to their systems, um, from the likes of Yodlee or Plaid or MX or Finicity. And so I think that is there some movement to sort of create a non-zero based fee approach to accessing this data set? Could that be part of the mix, perhaps? Um, I think that regardless of what happens to the legislation itself, what I think is here to stay is that consumers have become accustomed to connecting to their assets digitally, to connecting to their payroll accounts, their bank accounts digitally, and being able to share those accounts with trusted financial sources. And I think whatever format comes up next, you're still going to have apps like Venmo connecting to Bank of America. You're still going to have businesses like NewRes connecting to payroll accounts like ADP through Argyle. And so I think that fundamental regime is here to stay. Let's see how the legislation sort of works itself out.
Part of that is generational, if I'm not mistaken. I remember my mom would she subscribed to several magazines, and before she passed them on to friends or whatever, or recycled them, she would cut off her uh, address from the cover of the
Hmm.
magazine. Uh, I incorporated that habit in my own life because I do the same thing. But I would say anybody in their 20s and 30s has very little problem saying, "World, here's my financial information. Privacy doesn't matter as
Yes.
much as it used to. Have at it. Take a look."
Actually, I think that that's a really key point. There's a generational trend that Argyle is definitely riding, where consumers just in general have become so much more comfortable with sharing their information through a trusted and secure means. But the share button is far less scary today than it was just 5 years ago. And if we go back to the 1960s, you wouldn't dream of taking a copy of your pay stubs and sending them in the mail. Like you just wouldn't do it.
No.
Um, and that is a massive trend that we are piggybacking on. I completely agree.
Yeah. A few shows ago, Rich released his social security number to the audience. I was surprised by that.
An
He said,
experiment gone wrong. Yeah, so
Some things you want to keep private still.
"What was that? What was the name of that company? I always forget it. Was it something Lock, where the owner said,
well, LifeLock, yeah. Yeah.
here's my social security number.
Yeah.
It didn't work. Didn't end well.
Well,
Who saw that one coming? Right. Yeah. So, Shmulik, do you see any, future evolution in the verification space? Are there things you guys are working on behind the scenes that could, be a game changer in a year or two?
get this question a lot. And what I truly believe around this is I want to make sure that Argyle is doing one thing very, very well. I want to make sure that Argyle is providing cost-effective, very reliable income verifications. It is a huge space. It is a complex space. It is a space that has many different partners. There's a big ecosystem around it. Let's get this right.
Yeah.
And I think that we're going to be on that journey for many more years to come. If we get this one thing right, I'm hoping that our customers, that our partners will give us the authority to do a second thing and a third thing right.
Mhm.
But for right now, we're going to stick to just providing really good income verification services.
Love it. You want to take
Very good.
any cheap shots at Equifax or the work number before we log off? It's great for ratings and yeah, just, promotion of the next week's show.
I think that's your job. I'm going to leave
Okay.
that to you.
It is an area of expertise of mine. So, well, Shmulik, this was great. We really appreciate you coming on the show. This was very eye-opening, very insightful conversation
I
about
appreciate it.
current and future state of verification, such a huge part of our world in the mortgage space. And thank you for joining us this afternoon.
Yes,
Thank you for
thank you
having
very
me. I
much.
appreciate it.
And
No
thank you to
problem.
Depth.
Yeah, and as always, thanks to our great partners at depthpr.com. If you want to learn more about the great services that they provide people in our space. Rob, great seeing you as well. And to our attendees, thank you as always for spending part of your Thursday with us. We do the show live on Zoom every Thursday, 3 to 3:45 p.m. Eastern. You can go to chrismancommentary.com to get signed up for the live show. And of course, this releases the pod and YouTube in just about 10 minutes after the show ends. So, but Shmulik, thanks again. It was great to see you. And
Thank you.
everybody have a great rest of your week and weekend. And we'll see you next Thursday, everyone.
Thanks,
Bye for
guys.
now.
Great then. Take care, everyone.